Okay. So which patterns are there? There are those patterns for equal highs. Okay, where price now breaks, then return to the order block, then shoot. These patterns, if you have noticed my flashcards, whatever I share is an entry reason. Okay, it's an entry reason. So if you were just to revise my flashcards and say, okay, based on what is taught, let me go and check on my flashcard, you will realize that I've been providing entry reasons each and every time. But you and I knows that I start from the bigger time frame. I look at these things and I try by all means to make things not complicated for myself. I have chosen what I trade. If it's not there, then it's not part of my thing. We know this pattern. This pattern looks very easy. But if you see that this thing is happening on previous day, and I'm seeing maybe a stop hunt due to daily range and everything, and I'm seeing a break in market structure for that particular day, and a return to the order block. If I see such a pattern, it's very interesting for me. I use it for entries. If I get it, equal highs and everything, I use it as part of my confirmation to say, this is what I can do. Just by drawing it like this, I was able to interpret in a clear vision to say, this is what I need to follow to enter. Then I will only enter when price reaches there. Another setup in this similar, another pattern in this similar manner can be that of price, yes, creates equal highs. Then, yes, liquidity has been taken. But what happens? Price just come here and creates something like this breaker issue. Then instead it creates another low and days have passed. Then the approach for me again changes. I would need to wait for price, yes, to create whatever it wants to create. If it tests, it doesn't mean in this case, I won't enter there and then. I would wait for yesterday to be taken, breaking market structure, the clean breaking market structure, and shoot to the downside. Okay, so those are the things that are, those are the approach that I would use in this scenario. Then again, this pattern will come in different variations. They look so simple, but they really help. How you're going to apply them is what matters as well. So I'm sure you have seen this, and I'm sure you have backtested this, and you have seen the fruits which they produce every time. But the question is that which one do you follow? Which pattern do you follow? And which one have you chosen? I saw someone, I was reading something on under the psychology, and I also saw someone who was doing exactly that. This person has chosen to trade only the QML factor. If the person doesn't find that QML factor, they don't trade. And this, no, he has got about three. He has got this type of a pattern where it creates a cause model. Then when it comes, it does this, breaking market. So that's when it can end. If he doesn't see this pattern in the market, he doesn't find himself in the market. And these patterns are always there in this market. This pattern, I repeat, are always there and for every pair. So as you can see here, these are the pairs. I think I mentioned what. These are the only pairs that I find myself here. At least in one or the other, this pattern might be there. And you should utilize it for your entries. For example, what we have done here. Okay, which pattern is this? I'll go there and draw and see. There's another pattern, you see, creating a cause model, breaking market. Instead of it just going down, it will create something like this, then breaks now. Then that's when it will do the return, then come back down. What has it created? It has created something like yesterday being taken. Yes, we have seen it has been taken. Then we are seeing SMS. Okay, after SMS, we are seeing BMS. After BMS, we are seeing return to the order block. Then this. So they will always be there. And in a bigger time frame, you can use them. So you find that you can find something like this in a bigger time frame. This one can even tell you the bias where the market is likely going to go. If this is a daily order block, you know that if price reaches there, again, I should look for what will happen here in a smaller time frame. Let's say 1 hour going down. I should see how base market has formed here, and I should see another maybe QML for me to find a reason to enter, or another issue to do with equal highs. then liquidity should be taken, the break market structure, then go down, something like that. So you need to visualize. So I like this one. I like this type of a pattern and this one. These three gives the most. And as usual, my price must return to the order block before anything. If it doesn't return, I don't take a trade. If it doesn't stop me, it's fine. I forgive the pair. That's how we move. So these types of patterns, so there are a lot. So you can choose which ones really works out for you. I've taken key interest and I've said, okay, this pattern, I'm sure I've seen these patterns a lot of times, but the question is like, how are you going to use them and how are you going to add them to your trading plan? So this is how I use them and add them to the trading plan, and I'm good to go. Follow.
Yeah, concerning what I've understood about this pattern now. So you usually consider 3 patterns, right?
Yes, normally yes, and I use them as part of my entry.
The one with equal highs or equal lows, then the one with QML, yes, and the one with SMS.
Yes. No, normally for the one for SMS, but that SMS should have beaten what? A previous day.
Previous day.
For me to get a good one. So at least that.
Now, my question now is, based on these 3 patterns, where are we going to enter them? Is it on 1 hour time frame or lower time frame?
Yes, now again, that comes into this type of the thing that I'm talking about. Are you seeing how this is? Are you seeing this, how this is? How this is?
Okay.
Okay, let's say this is yesterday. It has been taken by a stop hunter. Then afterwards, we are seeing price failing to beat this stop hunt, and we have broken lower with a what? With an imbalance that we look for, isn't it? And this is 1 hour. Okay. So if I go to 30 minutes, because I'll only go to 30 minutes. This is 5 pips. Remember, this is just a few number of pips that you are risking. It's not as a lot. So it depends even with the type of a pair what you're trading.
Okay.
So it depends with the type of a pair what you're trading. Look at this pair. This pair is just, if I was to put here, I know that according to my rule, I'm supposed to risk 5 pips above. And look at how this pair is. This pair doesn't have a lot of issues with anyone. This pair is just it's just a few pips that you can risk. Maybe just up to here, or maybe 4. It depends with the type of a setup. So if I was to go in 30 minutes, let me say I want to refine further. Check how this comes. Which one is the last candle before this break? You see? So if I go in 15 minutes, at that same particular point, okay, actually in 15 minutes before this break, I can just refine it further to this, depending with the type of a setup. But me, if I start seeing a lot of noise like this, I don't like it. So I would prefer, after I have analyzed this in a 15 minutes order block, it's better I go to 1 hour where I'm seeing things to be very clean. Make sense?
Okay, yes.
The reason why I don't want to go in a smaller time frame, because there's a lot of noise in a smaller time frame, and I wouldn't like I wouldn't like it to affect me in analyzing, because I've analyzed everything that is straightforward in a higher time frame. Okay, so if I add everything, remember again what I told you, I don't take trades that when price, for example, this is this is my, okay, first of all, which pattern is this that has formed here? And that has given us a reason for entry. Which pattern is this in this case?
The one with SMS.
The one with SMS, isn't it? Where price has beaten yesterday. And after beating yesterday, what have we found? We found that, oh, actually price has failed to what? And it has dropped with an imbalance. Then what do we want? We want price to come back there, come here, then drop. So it's the one that I'm going to use. In this case, I'm looking at this type of a pattern, and let's see what's going to do. And this is what exactly it did. Okay, this is what exactly it did. And it has just done that, and it has paid yourself at your first low, which is this low. You have paid, I don't know how many pips here, but you have paid yourself. You have secured even what? If you want, you can even reduce further. Whatever happens here, it's either it's going to be draw, or if you have managed to pay yourself a bigger percentage, it's not going to be draw. It's going to be one. It's going to be a win-to-win. So it depends again with the type of the setup. Then again, I will not put my limit below my order block. Where my order block starts, normally that's where I would put my OB. I'll put my price. Or if I'm entering 3 trades or 2 trades, I'll put the one at where the order block is, then the other one at 50% of my order block here. So in this case, if I was entering 2, I would have put one on my 50%, then the other one on the other side. Then you're good to go. Make sense?
Yes.
Yes. So these are the concept. This is the concept of patterns that I follow. So these 3 makes a lot of sense for me in terms of entries. The one for SMS, 1. The one for equal highs, 2. Then the one that is now can now again, after yes, you have found this, everything has worked out. This is what you follow. Then what do you need to do if price doesn't return there and then, like the way it has done today? Price has not returned today, just there and then. Instead, price has just what? Oh, price has returned there and then today. But what happens if price just broke nicely and just entered into a lot of days? Then the approach again changes to this kind of an approach. Then you find yourself risking very small, and you find yourself winning big, and you find yourself losing small. Okay, so these are the concepts that I make, and this is how I add these patterns as part of my trading rules. Is that okay with the patterns?
Okay. Yes. Yes.
Any questions, please?
I have some questions based on the entries.
Okay. Talk to me.
So, what advice can you give on which time frame to enter the market?
I just said it. It depends with your equity. Okay, so me, are you a day trader? Are you a swing trader, or you're a positional trader?
I'm a day trader.
You're a day trader, right? So I just gave an example. Get me right. That question is very important, but it's up to you if I answer this, if you're going to follow it or not. So this is what happens. It depends with the setup. This kind of an imbalance, it might not be like this in other setups. This simple imbalance here, okay, this imbalance here, are you seeing it? This
Yes.
imbalance might be a bit long in other case. Are you seeing this order block? This order block within an order block, if we go in 30 minutes, it might be small, but in this case, it's just a little bit big. But the question you are going to ask is that, how much are you risking? Okay, which one were we looking at later? We were looking at this guy, how we could have taken advantage of this guy here. Have you seen that if I go in 1 hour, the order block is big? You see, this is the last candle before the break. You're seeing it? Okay.
Yes.
And we're looking at everything at the support. But when we went to 15 minutes, what did we find? We found that actually there was another last small candle here.
Hello.
Hello.
Yes, good afternoon.
Good afternoon.
We're here to collect.
So sorry about that. So when we zoomed in further in a smaller time frame, we discovered that actually this order block can still be refined, and this is how it was, isn't it?
Yes. Yes.
Yeah. So whatever is happening at the supply zone in a bigger time frame. So how are you going to risk, and which time frame are you going to use? It depends with the type of the setup. The setups will differ, and the order blocks that are going to be given are going to be different. So in Euro GBP, for instance, okay, in Euro GBP, for instance, here, we are seeing it, it's a different scenario, and we're using this pattern. It's a different scenario. It's just too small, the imbalance is too small, but it comes a time when the imbalance is a little bit what? Big. So it depends with the type of the setup, but your stop loss at every time you are risking should be what? At least 5 pips above, to be on the safe side, especially when there's an SMS. At least try by all means to at least increase it, at least even to 7 pips if there's an SMS, because price at some point might want to just bounce off this order block just to try maybe get this. I'm sure you've heard about the knowledge of rejection drop. So maybe price will just want to come and reject from here. So normally when there's an SMS, at least put your stop loss a bit, at least in between the SMS, because price might want to just pierce and maybe reject from that area.
Okay. Another question is which one is advisable between the limit order and market execution?
So like in this case, I wanted to enter this guy by execution. Reason being, I just entered my office, checked it out. I haven't looked at the market the whole day today. I haven't looked at the market. I was just doing some other projects on the ground. So after looking at this, because I was watching it after I put this. So yesterday I was watching it. It spiked in the night when I was studying. It just spiked. Then today I was hoping for this, but I didn't check. So I found price was somewhere here, about about an hour ago. As I was preparing when we were communicating, I think if I was to show you the screenshot that I shared in the VIP students, it was somewhere here. Okay, let me check. VIP students. Okay, I'm forwarding you the screenshot that I. Where is it? Okay. Okay, so I'm just forwarding it. So I forwarded you this. That's where it was. Okay, check it out in your Telegram.
Okay.
That's where it was.
Okay.
I found that and I saw that before I even analyzed everything and but others had already analyzed and so on and so forth. They were able to capitalize. So what am I going to do in that case? It's a decision that you're going to make. But normally, limits work out very well for me. Limits work out very well for me. I can't lie to you. I think limits play out well because I can just put and forget later on. I check them out whether they are triggered or not. So, but in this case, if price is still within your found that price is still the order block, you can still do execution. You can decide based on how you are looking at execution, then fast, quickly, you put your stop loss, then you put your target area and so on and so forth. So, but limits are better for me because I can do other things and find them just in profit, or maybe my limits have been tapped off.
Okay.
Yes. So limits are okay for me. Limit orders are okay for me.
So concerning the risk to reward ratio you take, so what is the least you take?
So the highest that I can take, normally I get to take the highest risk reward ratios in pairs that are volatile, which are like gold, Nasdaq, and maybe US30 sometimes. These are the ones that you find that no matter what, at some point, you just need to risk a lot because anything can happen and that thing can blow your account. So 2% is okay. But in my trading, if you were to calculate, you realize that in most of the times, it's either less than 2%.
Okay.
It's less than 2%. Sometimes it's just 1%. 1%, I get more than 100% times 2 or something. Okay. Or for example, this guy here, how many percentage is this risk? Which percentage is this? Oh, I haven't set it. Oh, this is like 0.0. How do you calculate this? Then I'm getting 0.1. So I'm risking, like, for example, in this case, it can be more like I'm risking 8% for me to get 21%. You get that kind of a thing. I'm
Okay,
risking 8, for example, in this case, and how I'm seeing this, it's more like I'm risking 8% to get 21%. Now check the difference. You see that kind of a difference? You're risking 8 to get 21.
so
Something like
that's
that.
about risk to reward ratio 1.25, right?
Yes. So that's about what's it? One. That's about yeah, 1 to 2, 1 to 2.5, something like that.
Okay. Okay. That's okay.
Yeah. So then it depends again. Sometimes you find that your order block, you had extra refined it because it was there, but here it was not clean. There's a lot of noise. So the best is supply that I'll get it all because it's a huge supply. Then you put it there. Then how much could you have been risking in this case? You could have been risking about 6% to get about how many percentage? To get about 22% or something. So there's such kind of arrangement. Okay. So you will see as you're just following the same small concepts and how you do it, and now you will realize that it will be just flowing and your risk will be very smaller than your percentage and you'll be covering it. So all you just need to do is that on your trading plan, what are you covering? What am I looking at? What patterns am I going to follow to help me just add an extra confirmation? We're just adding extra confirmations. If I don't see them, am I going to trade or not? Because on this guy, you will discover that there's one that doesn't have it. There's one pattern that won't give you a liquidity takeout, but instead it will give you just SMS and return to the order block, then shoot. But the question is, are you going to take this type of a pattern? Okay.
No.
So the one that gives liquidity, you discover that it gives more. So it's better that if this is happening in a bigger time frame, the SMS and everything, the good one that you realize is that if this is happening in a bigger time frame, let's say 4 hours daily, in daily there was an SMS, then there was a break in market structure. The reaction here that you're going to get, if you were to price returns there and you get another QML fractal within that supply zone, and trust me, it's going to be a very good setup for you. It's mostly unlikely that it's going to, if this is a daily order block, then price returns there. Then within that daily order block, you have found this pattern, this, and everything. You find that your risk, first of all, will be very small. Second, your setup will be powerful because you're trading within the what? The supply zone, where price is mostly likely to go down. Okay, so that's the approach that I can give if I want to enter a trade that has got an SMS and stuff like that. So the approach that I'll give, I'll wait for price to react in that area, not to enter there and then, no. But basically, these are the patterns that I follow. Okay. We're almost going to 2 hours.
Well done.
Okay. Okay, so everything is understood, and does it make sense?
Yes.
Is this the same thing that you follow, or there's something that you? What have you learned? Tell me what you've learned.
Yes. Honestly, I've learned a lot just for today. So I've seen some eye-opening patterns that I usually get confused when I see them. I don't know that this is how they they usually form.
Okay.
So, but by now, so I've niched down to the main three patterns that you said you usually take. So
Mhm.
now
And I've-
from today,
Mhm.
whenever I want to back test, I will just be looking out for those three patterns and I will stick to them.
Mhm. Okay, I'm not saying that, but I'm not saying that you should limit yourself, but whatever pattern that you're going to put into your trading plan, it should be something that you have back tested to say, even that one actually plays out. You see, you
Yes.
have to tell yourself, so I've back tested these patterns and they're really playing out. And these are the ones that the proof is there. These are the ones that you see almost every day in the market.
Yes.
And those are the things that you see in my flashcards. And I don't change. I always find them. And if I don't find them, I'm not in the market. If there's a lot
Yes,
of
the less is the less is more.
yes,
So you don't have to jump pack yourself with many patterns because you will get confused in the long run. So
Yeah.
it's better to stick to the one that you know they are proven with by your mentor.
Yes.
So I would like to look out for these ones so that when I'm versatile with that, I can add more.
Okay, that's great.
Mm.
So we can switch to divergences.
Okay. Are we doing it right now or we should do that tomorrow?
I wanted to finish today so that I should just remain with questions and voice calls with you. Because I might
Okay.
not be, I'm likely not to be available after 15th of, I need to give myself some room to study and to do some underground businesses.
Okay, that's okay. Can I exit now so that you can just
Yes, you can exit.